Okay, so this is the wrap up for the live market open for Friday. It's actually Good Friday, March 25th. Today we have thin liquidity and only one event, but we did have quite a few developments yesterday that still move markets. Better mood in markets, higher oil prices, they recovered from the lows, but the euro is a bit stuck. Yesterday we had a big bounce in the pound thanks to the fading out of the Brussels bombings that imply higher chances of a Brexit. Better than expected UK retail sales, and of course the weakness of the US dollar. TLTRO in the Eurozone was small, wasn't that important because we have new TLTROs coming and more money printing from the almighty ECB. Durables goods orders in the United States came out weaker than expected. Most importantly, core orders dropped 1%. Revisions were to the downside. This tells us that there is softer investment. The Fed is vindicated in the statement from last week. Okay, but maybe they knew it. Anyway, it halted the dollar's advance. Other figures in the US were okay. Jobless claims remained at low levels, which is good news. Market services PMI came out as expected and it went back to growth territory. And overnight, we had Japanese inflation miss according to the national and Tokyo figures, but according to the BOJ's very special inflation figure, everything is okay at 1.1%. Currencies. So euro dollar, very limited range, 111.40 to 111.90, and even narrow range at the moment. Bigger lines to watch in this grind down of euro dollar. 110.70 and 112.50. Pound dollar, very nice recovery, very nice bounce. Double bottom 140.50, the high 141.75. Dollar yen battling the 113 level, supported 112 resistance. 112.20 resistance at 114. Dollar CAD, well, dollar and the Canadian dollar suffered the fall in oil prices, but it managed to recover. Dollar CAD fell from resistance at 133, currently 132.35, support at 131.70. As you can see, ranges are quite narrow. 75.30 on Aussie dollar, support, well, limited support there at 75, resistance at 75.40. Kiwi dollar battling the 67 level, very, very stable. Resistance 68.20, support at 66.20. Number 20 is significant. Today we have one event on the agenda, and it could be a big market mover, the third and final release of GDP in the United States of America. It's expected to remain unchanged at 1% annualized growth. Watch out for any revision. It could be significant. These things happen. Watch out for the composition of GDP. It could be to the upside. Could show bigger inventories, which is not good enough, but better consumption is good news. It's a sort of a summary. Let's see if we see changes. Remember that the Fed talked about investment and export as soft. Let's see what's going on over there. We could have the air traffic control phenomenon that will have hours of boredom and then boom, a big excitement to end the week. Okay, so all in all, stable markets, thin liquidity. The dollar's rally, which we've seen throughout the week, the recovery, thanks to the hawkish comments from quite a few Fed members, this more or less halted yesterday with the poor figure from the United States, the durable goods orders. Okay, GDP will set the final tone into this long weekend in many areas. Okay, so that's the wrap up for today.